The trade closes at 0. A tie, no loss. The trade closes confidently in profit plus $. The trade closes in profit, a clean execution of plus $. Series result. Hi friends, Ravi here. Today we will break down a really important thing most beginners can't accept, a breakdown trade, a zero. For some reason people treat zero like failure and instantly start rushing, switching direction, increasing risk, clicking faster. But zero isn't a defeat, it's a signal that the market paused and didn't give you an impulse yet. And if you can stay calm and wait for structure, you start making money exactly where others start panicking. I will show a real series now. First tie, then a move down, then a reversal up. No emotion, just facts. If you want more breakdown and useful info, check my Telegram, link in the description. Let's go. Alright, we are on the Olymp Trade platform. Candlestick chart, because candles show who is pressing and where the market is losing strength. I choose USD Japanese yen with a 93% payout. Time frame is 1 minute. Perfect for seeing structure without reacting to tiny noise. I keep one main rule in my mind. I don't trade what I want. I trade movement when it's confirmed. Trade number 1, $100 down. I start with session with $100 and enter down. After entry, price doesn't show a clear impulse. The market moves into consolidation. Candles get weak, movement is small, and neither buyers nor sellers dominate. This is normal. On the 1 minute chart, the market sometimes freezes before choosing a side. In moments like this, your main job is not to panic. At expiration, price comes back to my entry. The trade closes at 0. A tie, no loss, and I treat it as an information. The market hasn't confirmed anything yet, so I stay calm and keep working the plan. Trade number 2, $100 down. I re-enter $100 down. This time, sellers increase pressure. A clear move down appears. Candles become more decisive and structures start showing up. The market stops, standing still, and finally shows direction. This is the key. I'm not chasing a trade. I simply waited until the market started doing what I want to trade. The trade closes in profit. First money logged in plus $93. Good. Now I check, was there a one-time push or a real stable impulse? Trade number 3, $150 down. I increase to $150 and enter down again. The bearish impulse holds. Pullbacks stay weak, sellers keep control, and buyers can't flip the move. Candles keep confirming downside pressure. I increase size only because the market is confirming the scenario, not from greed, but because the structure is still valid. The trade closes confidently in profit, plus $139.5. Let's start trade number 4, $200 up. Next, I increase to $200 and switch to up. Why change direction? Because I see downside movement showing and possible reversal forming. Sellers start losing strength and the move down is no longer clean. And the market looks like it's preparing to shift initiative. And it does. Buyers take control. An upward move forms. Price starts pushing up more confidently and sellers can't keep the same pressure. This is where you don't cling to down just because it worked twice. In trading, the right person is stubborn one. Is the one who reads the change in pressure. The trade closes in profit, a clean execution of plus $186. Series result. Total balance plus 86.8. And the key point, the series wasn't perfect from the first entry. There was a tie, but it didn't knock me out of the process. It helped me wait for the structure. This example shows what real trading looks like. Cold logic, sticking to the strategy, and emotional control, not chasing a perfect run. Zero isn't a loss, zero is the market pausing. And if you can stay steady during the pause, you will catch the move when it actually shows up. If you want more breakdown and useful info, check my Telegram, link in the description. Subscribe if this helped. And remember, the market respects people who can wait and act at the right time.